This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, July 24, 2026, and this is the New York session. Now, let's get into it. Bitcoin is holding its ground at $64,348 despite a headline that reports futures demand has crashed to 2024 lows. We are seeing a brutal divergence. Spot holders aren't selling, but the leverage engine has stopped cold. With the fear and greed index trapped at 14 out of 100, the market isn't just nervous, it's in a state of acute distress. Let's break down what the data tells us this morning. Before we dive into the charts, let's look at the scheduled catalysts shaping this session. First, the U.S. Senate housing bill now includes a CBDC ban. This legislative shift creates a binary risk-reward scenario specifically for XRP, potentially insulating it from broader macro fears. Second, PayPay, which owns 40% of Binance Japan, has filed for an IPO seeking up to $1.1 billion on the Nasdaq. This introduces a new liquidity sink and potential selling pressure for BNB ecosystem tokens as early investors assess exits. Finally, Core Scientific reported disappointing fourth-quarter results, turning lower after the print, which serves as a negative sentiment anchor for proof-of-work miners and hash rate stability. These are the structural forces we are navigating today. The broader picture is defined by a collapse in risk appetite. Total cryptocurrency market capitalization has contracted by 0.817% to just under $2,282 billion, while 24-hour volume stands at roughly $62 billion. Yet, Bitcoin futures demand has fallen to 2024 lows. The VIX is sitting at 16.64, which is relatively calm for traditional equities, but the disconnect between Wall Street's composure and crypto's panic highlights that this is a specific digital asset deleveraging event, not a systemic macro crash. Grid, CIPHER, SPECTER, walk me through the mechanics of this split.
It's a classic flight to quality masked as stagnation. Look at Bitcoin dominance climbing to 56.645%. Capital isn't staying in the ecosystem, it's consolidating strictly into Bitcoin because alts are bleeding liquidity. The 0.817% drop in market cap against that $62 billion volume suggests that while there is activity, it's mostly sellers hitting bids with no meaningful buy-side depth to absorb the pressure. The leverage is being purged, leaving spot holders exposed.
And that exposure is dangerous because the VIX at 16.64 suggests traditional markets don't expect a crisis, but crypto is pricing in one. The issue is the derivative exhaustion. With futures demand at 2024 lows, there is no institutional bid waiting to catch falling knives. When you remove the leverage engine, price discovery becomes erratic. We aren't seeing a healthy correction. We're seeing a vacuum where support levels are theoretical until volume returns.
That vacuum is widening across the altcoin space. Solana is down 3.6% to $74.43, and Ethereum is off 2.8% at $1,860.95. But the real violence is happening in the higher beta names. Pulse, how is the crowd reacting to this? Is this a capitulation zone or just the beginning?
This isn't just fear, it's acceleration. The fear and greed index is at 14 out of 100, but the crucial data point is the 7-day trend line rising from 12. Panic is accelerating, not stabilizing. Retail sentiment is fracturing. You see Dogecoin down 4.5% to $0.0686, and infrastructure plays are being violently rejected. Avalanche is leading the decline at minus 5.6%, and Cardano is down 5.1%. The altcoin season narrative is dead for this session. Capital is fleeing risk entirely for utility-driven, stablecoin-heavy ecosystems. Until that 7-day trend reverses downward, any technical support you find will be sold through.
So the crowd is panicking and the leverage is gone. Let's go to the technicals. Grid, you've been watching the Bitcoin structure. Price is holding at $64,348, down only 1.2%. That seems resilient compared to the rest of the market. Are we looking at a floor, or is this a trap?
It's a liquidity void, not a floor. The price rigidity at 64,348 is artificial because total market volume of 62 billion is insufficient to absorb the selling pressure indicated by the 0.817% daily cap decline. Thin order books mean small sell orders trigger disproportionate dislocations. The divergence between Bitcoin's modest negative move and the collapse in futures demand signals that this price level is supported by spot holder stubbornness, not active buying interest. Once that thin book breaks, the path of least resistance is down.
And that stubbornness is being tested by external flows. The 700% spike in Iranian crypto outflows following recent geopolitical strikes introduces unregulated liquidity flooding the chain. This isn't smart money accumulating for long-term holds. It's desperate capital-seeking anonymity. This creates volatile, non-fundamental supply shocks that distort standard flow analysis. Meanwhile, the PayPay IPO filing for $1.1 billion is pulling institutional attention and potentially liquidity away from the BNB ecosystem, which explains why BNB is only down 1.1% at $560.3. It's defensive, not strong.
Let's zoom in on that defensive posture. Tron is the sole gainer in our top tier, up 1.1% to $0.3303. Why is TRX standing tall while everything else bleeds?
Because TRX is functioning as a settlement layer, not a speculation vehicle. With capital fleeing smart contracts, TRX is being utilized exclusively for stablecoin transfer efficiency. It bypasses the speculative L1 narratives that are currently getting crushed. It's a utility play in a fear environment. That's why it's the only green number in a sea of red.
Shifting to the biggest loser in the sector, Avalanche at $6.17, down 5.6%. Grid, where is the technical support here? Is there any evidence of absorption?
There is no absorption yet. We're seeing a breakdown confirmation. At $6.17, Avalanche is testing critical support that has lost volume. Without the volume expansion we discussed earlier, any bounce here will be fake. The lack of liquidity means that once this level fails, there is minimal resistance to guide the price lower. It's a structural breakdown, not a dip.
I'd challenge anyone calling this a dip. The challenge here is the absence of the derivative engine. You cannot find technical support when Bitcoin futures demand has hit 2024 lows. There is no upward velocity coming from institutions to validate that 6.17 level as a base. It's a free fall until leverage cleans out completely. The technicals are irrelevant until the balance sheet repairs itself.
That brings us to the most unique divergent asset in the room, XRP. It's down 2.9% to $1.9. While Avalanche drops 5.6%, XRP is holding relatively tight. SPECTER, you mentioned earlier that the CBDC ban might create a unique fundamental catalyst for XRP. Walk us through that risk angle.
Exactly. The Senate housing bill including a CBDC ban creates a rare regulatory clarity event specifically for XRP. In a market drowning in fear, this acts as a shield. XRP is down 2.9%, while the broader market is averaging closer to 4 or 5% declines. That outperformance isn't accidental. It suggests the market is quietly rewarding regulatory safety over speculative utility. While everyone else is liquidating, XRP holders are betting on the policy tailwind. It's a contrarian bet on structure, not sentiment.
But be careful about labeling that outperformance as smart money accumulation. As I noted, the on-chain data shows a 700% spike in outflows linked to geopolitical sanctions evasion. Some of that XRP movement isn't institutional hedging. It's illicit or sanctioned capital trying to move quickly. That creates volatile supply shocks. Just because the price is holding doesn't mean the buyers are clean. It means the sellers are fragmented.
The sentiment data supports that caution. The community buzz around XRP isn't the euphoric next 100x noise we saw in previous cycles. It's quiet. The extreme fear index at 14 out of 100 means retail is hesitant to chase XRP even with the CBDC news. They're waiting for the dust to settle. The lack of social volume confirms that this is a quiet accumulation zone, not a breakout moment.
Let's talk about Bitcoin again. Apex, you've been synthesizing this spot versus futures divergence. The headline says Bitcoin futures demand is at 2024 lows, but price is only down 1.2%. What does this tell us about the health of the market right now?
It tells us that the market is currently running on fumes. The spot resilience at $64,348 is purely passive. Grid flagged the lack of volume, and CIPHER highlighted the liquidity drain from the pay IPO and mining stress. Together, they paint a picture where the only thing keeping Bitcoin from dropping harder is the sheer inertia of large holders who refuse to sell. But Pulse pointed out the accelerating fear trend from 12 to 14. If those spot holders decide to preserve capital rather than hold, there is no leverage left to support the price. The floor is currently held by habit, not fundamentals.
And that habit is being tested by the broader sector rotation. Link is down 2.4% to $8.35, and Chainlink's broader ecosystem peers are struggling. CIPHER, is there any flow data suggesting institutional interest in tokenized assets, given the TD Securities report mentioning NYSE tokenization as an institutional turning point?
Not yet. The TD Securities report is a narrative hook, but the flows are currently fleeing high beta growth narratives. We see Uniswap down 0.6% to $3.77. That's actually the best performer among the major alts, but it's still negative. The capital is moving to BNB and TRX, which are closer to centralized exchange utilities or high-yield stable mechanisms, not decentralized finance governance tokens. The institutional turning point TD describes is far away from the current spot price reality. Right now, the flow is strictly defensive.
So we have a market where Bitcoin is stuck, alts are bleeding, and the few survivors are defensive utilities. Let's look at Solana. Solana is at $74.43, down 3.6%. Grid, does Solana offer any technical hope, or is it just following the general downtrend?
Solana is following the general downtrend with higher beta. At $74.43, it's approaching key support levels that have been tested repeatedly. However, with the overall market volume at 62 billion, any bounce on Solana will face immediate resistance. The chart doesn't lie, lower highs and lower lows, unless we see a surge in volume that exceeds the current 62 billion baseline. Solana is just another victim of the liquidity vacuum. It's not holding, it's surviving on momentum that is rapidly fading.
Pulse, what is the sentiment around Solana? Is the community rallying behind the tech, or is this a washout?
It's a washout. The social signals are dominated by frustration over the consistent underperformance against Bitcoin. When you pair Solana's 3.6% drop with the fear and greed index at 14, you have a feedback loop of panic. Traders are cutting losers to raise cash, which pushes the price down further, triggering more fear. There's no constructive sentiment here. It's pure capitulation.
Finally, let's touch on the laggards. Cardano at $0.1647, down 5.1%, and Avalanche at $6.17, down 5.6%. SPECTER, you challenge the idea that these are oversold. Why is the risk here greater than the reward?
Because the risk is structural. The Senate CBDC ban helps XRP, but it doesn't help Cardano or Avalanche. Those projects are built on speculative smart contract platforms that are currently out of favor. The 5.6% drop in Avalanche isn't a random fluctuation. It's a re-rating of the entire Layer 1 infrastructure sector. With Bitcoin futures demand at 2024 lows, there is no narrative fuel to propel these assets back up. The risk is that these levels become the new norm until the next major catalyst emerges. And right now, the only emerging catalyst is the pay IPO, which might actually siphon more liquidity away from these altcoins.
To wrap up our analysis, Apex, bring it home. We have extreme fear, a futures demand collapse, and a sector rotation toward defensive utilities. What is the single most important observation for traders watching this session?
The single most important observation is the decoupling of price from participation. Grid showed us that Bitcoin is holding at $64,348 on weak volume. CIPHER confirmed that flows are draining into BNB and TRX, leaving Solana and Avalanche exposed. Pulse warned us that the fear index is accelerating, not bottoming. Put those together, and you see a market that is technically intact but fundamentally hollow. The opportunity isn't in catching the falling knives of high beta alts, it's in observing where the liquidity settles once the leverage is fully wiped out. Watch the $62 billion volume mark. If it expands, the market finds a bottom. If it contracts, we are still in the danger zone.
Key takeaways for today. Bitcoin's spot resilience is masking a severe derivative collapse, with futures demand hitting 2024 lows. Altcoin season is officially paused as capital rotates into defensive utilities like Tron and exchange tokens, leaving high beta names like Avalanche and Cardano vulnerable to further downside. And while XRP benefits from a unique CBDC ban catalyst, broader market sentiment remains entrenched in extreme fear, suggesting patience is the prudent strategy. Join us next time as we monitor how these dynamics evolve. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.